Hey all, welcome to ShareTreck. Today is Monday and it's the 14th of February. Happy Valentine's Day wherever you are, and I hope you have a great evening. The market started off pre-market, it was a bit red, and now of late I'm seeing many shares in the green. I still maintain that this is a volatile market and we are not yet past the volatility. So any green that you see here is potentially a profit-taking opportunity, in my opinion, and the markets are likely to turn red anytime. So that's what I feel. There is still a lot of debate going around in various circles about whether we are facing a sustained inflation or is there going to be a recession. You're already aware, I have walked you through the deflation camp, which is Cathy Wood, and a few other notable economists. And then we have the other side, which is the Fed, which is looking at 7.5% inflation, and one of the Federal Reserve governors had called for a 50 basis point increase in interest rate, and that kind of tanked the market, and there was a bit of talking back on that, walking back those statements by the Federal Reserve itself, and the market picked up again. So it's all in a flux. Nobody really seems to know what's going to happen. In my personal opinion, having looked at everything, I still feel that recession is on the cards if the Fed increases the interest rates too far. However, there's a lot of political pressure on the president of the US to control the inflation, especially because the midterms are coming around. And the prospects of such heavy inflation is very scary for most politicians, and the election cannot be postponed. It's going to happen, and inflation at 7.5% seems very scary. And if someone were to tell you today that in 2 months the inflation is going to fall down to maybe 3.5%, you wouldn't believe them. So when political pressures are very high, it's very difficult for the Fed to stay neutral, and there's going to be a lot of pressure on the Fed to increase the interest rates, which some economists believe is going to add fuel to fire, because many companies are just about coming out of the COVID suppressions that they were operating under. There is a labor shortage. There is a supply chain bottleneck which is getting resolved. So we don't know whether we're going to have inventory glut or deflation side, and whether putting interest rates hikes at a fastened pace is the solution right now, and we need not worry about deflation. So this is the kind of situation we are in, and that's why you will constantly find the market going between green and red. This is going to happen very often. Those people who have got who deal in calls can easily sell some calls and make money out here. And anyone who has already got money lying around could potentially look at intraday trading and make some money out of this volatility. But it's very risky. You may likely get your capital stuck in the market, because the market may suddenly fall very steeply a given day and you may be out of money, and it could be a problem. So right now, I would confess that personally, I don't have any money to invest in the market. And the last investment I did on ARC-G is languishing in the red. It's almost coming to double digits now. All my other holdings, the big tech holdings, are doing reasonably okay. They are also in the red, but not so bad. And my real estate trust holdings are absolutely in the positive and giving me monthly dividends. So overall, I'm willing to wait, because I'm a long-term investor. I'm willing to wait. And when the market is good, and still there is some volatility, I do sell calls and make some extra money here and there. And I do intraday trading, like day trading and swing trading. But right now, I'm just sitting tight. And having said that, let us look at the market the way it is right now, and I'll attempt to do some technical analysis, and we'll see what happens next. Another point I have in mind is that this is my my request to all the subscribers to this channel. Please think carefully when you're investing just in one sector, because the fundamental principle of investment is diversification. You have to diversify in terms of industry, You have to diversify in terms of geography. I have already spoken about all that in a previous video where I was talking about how to make a balanced portfolio. So please don't put all your eggs in the CRISPR basket. Then you have to lose opportunities that may come elsewhere. So there is many ways to make money. It's not important to make money just through CRISPR, but it's important to make money. You need money so that you can be financially independent and you don't have to go and work 9 to 5. And in order to do that, you have to seize every opportunity possible to increase your capital. As soon as you have profits, you need to take them out and save them up separately in a low risk investment and continue making those profits without losing your capital. That's the rule of the game. And if you do those things, you're likely to be financially independent much faster. And just shares are not the place to invest. You have got real estate, you have got bullion, and you have got the bond market, and you have got commodities. So there's a whole lot of areas in which one can invest. And recently I published, not recently, I would say yesterday I published a video on gold, where there's a tremendous opportunity, but only 8 people have seen the video so far. So all I'm saying is that I don't want you to go and watch the gold video, but I'm warning you that if you just focus on one sector of the economy and just on shares in CRISPR companies, then you're asking for trouble, because CRISPR is definitely going to yield you profit, but it's going to take you at least 5 years. If you have seen my FDA approval process video, you would realize that even CRISPR therapeutics and vertex, which are in the advanced stage of getting into sickle cell therapy approval, I suspect that they are much further away to monetization than I originally thought. And there is various points at which they could potentially fail in getting FDA approval. So one has to be very, very careful while investing. You need to diversify. Please do not lock yourself into a very, very narrow vision of just CRISPR and CRISPR. Now, let's quickly look at some of the news articles that we have. So the first item I have for you here is an interview which I personally, I think I saw it on NBC, if I'm not mistaken. This article is taken from Bloomberg. So 6th Street, which recruited Jennifer Doudna recently as chief science advisor, got a slot for television interview. They are doing all the right things to get on top of this biotech market. Along with Martin Chavez, who is the 6th Street vice chairman, the two of them gave an interview talking about the CRISPR space and how there is a lot of opportunity. And one of the notable things Jennifer talked about in the particular interview was the convergence of AI, genomics, and robotics, and all together. Which is very, very similar to what we hear Kathy Woods talking about. So I'm going to do a separate video on that. The next article is about CRISPR therapeutics, is in marketbeat.com. And the thing here is that Brookline Capital Management has started coverage of CRISPR therapeutics. This means a lot of high net worth individuals are now going to be looking at CRISPR therapeutics, and they have been given some price targets. So the firm has set a buy rating at 143 price target on the stock. So if we see this, CRISPR therapeutics is right now at 60.18, and what we are having here as a target is 143 price target. So there's a potential upside of 140% from the stock's current price. So that's a very, very good ringing endorsement from a capital management firm. So things are looking good, but this is not going to happen overnight. This is going to take time. So we need to be patient and we need to wait it out. Okay, let's now start looking at the market. Let us start with VXN, which is where we always do. So you can see that the VXN has spurted again. Let me go into the familiar 1-year view. And in the 1-year view, you can see that we have the second candle out here. This is today's candle. Right now, we are sitting at 35.06. That is up 90 points. 2.63% is the increase that we have seen in the VIX. The MACD is turning bullish, which is not a very good thing. And the RSI is also, the momentum is picking up. So things are not looking great. However, in the NASDAQ, we have a 0.23% increase. I don't know how to explain that. It should actually be in the red. But let's go and look at our biotechs. Where is the biotech? Here we are with the biotech. And I'm going to sort this to have the biggest winners in front. So PSEB is at the top of the pack today. And PSEB has put on 21 cents, that is 1.87%. MACD is bullish, and the momentum is also picking up. So we are in the positive today, but I can't guarantee that this is going to last till the end of the day, because none of the risk issues have been resolved. Everything is speculative right now, whether or not the Fed will increase the interest rate by 0.50 or 50 basis points, or is it going to be 25 basis points, whether it's going to be an emergency meeting to increase the interest rates, or it's going to be waiting until March. So all these things are not clear. The Ukraine tension is also not resolved. So nothing has changed. So there is no reason for any of these to go green or red. They should have stayed flat, but here we are. Now let's look at Beam, which is up 1.08%. And again, that's a 68 cent increase. We are below the previous support that we had at 65.12. So I'm going to mark this as a resistance, and we are likely to stay below this today. Bluebird is up 0.46%, and we are above a support of 6.44, and in all cases you will see what I call as a doji candle, where there's a thin body between two wicks, preferably most probably in the center of that, which indicates indecision. We have fallen below the previous support, which was at 6.86, so I'm going to mark that as a resistance. I don't think we are going to go above that today. Editas is up 0.43%, that equates to 4 cents, and we have a support here of 15.37. Right now we are at 16.18. I think we'll stay above that support, but we are not going to go above the 9-day EMA, which is this yellow line out here, which stands at 17.53. So if you look at the MACD, it seems bullish, but it's going in parallel with the signal line, and most probably it's going to drop down because our momentum is also very low in the RSI. Let us look at CRISPR Therapeutics. It is up 0.15%. So you should be seeing an earning marker here, which we don't have. There should be an earning marker like this. I couldn't find that. So we'll have to see the CRISPR Therapeutics earnings tomorrow. And I would be very actively watching out for any information on pipeline. And CRISPR Therapeutics have to talk about the pipeline, and I hope they provide more color on where they are with regard to their sickle cell therapy, and how much more of trials are remaining, and how far it is before they monetize. So we want to make a sense of that question. And since CRISPR has got only two sources of income, one is the licensing fee and other is the money that they get from Vertex, they cannot avoid talking about the pipeline, and they would also actually be very eager to talk about the pipeline to show progress. So let us watch that, and then we'll come back to these prices tomorrow, and hopefully there will be a uptick if things sound optimistic out there. Now next, let us go on to Allogene. Allogene is down minus 0.99%, and we have a support here which is going to be at 9.93. right now we are at 10.05. MACD is bearish, and momentum is also down. So no good news here for us. Novartis is up 0.17%, and we have fallen below 3 support lines, and I'm just going to convert all of them into resistances. It was a hard-earned growth that we had there, which we have lost. So this is the nature of the volatile market, and right now we are sitting at 85.65, and our MACD and as well as the momentum is absolutely bearish. tdoc is down minus 1.07%. That's around 78 cents down. MACD as well as momentum is bearish. We have a spurting VXN, and therefore things are going to look bad for tdoc for the rest of the day. Now ARCG is down minus 1.30%, and it has fallen below the previous support we had of 48.82. Therefore I'm going to mark this as a resistance. MACD is bearish, momentum is short. This is the story for most of the stocks. Intellia is down minus 1.50%, and we are coming towards the bottom of the bearish channel. We are traveling towards that, and we are below all the exponential moving averages. So it's a very, very bad look on the chart, and the MACD is down, and the momentum is also down. If we go to a 1-day time frame, we can see that even there the MACD is down and the momentum is down, and we are below all the 4 exponential moving averages, which are 9, 20, 50 and 100-day respectively. Not a good look at all. Verve is down minus 1.05%. All the indicators are down. We are below all the moving averages, so that's not looking good either. Vertex is down 1.50%. Same story here. IMTX is down minus 3.26%. Same story here. Everything is bearish. Regeneron is down minus 2.73%. Same story. Everything is bearish, below all the moving averages. Pfizer is down 3.40%. It, however, has got a support from the 9-day EMA and the 20-day EMA, which is this yellow and the orange line respectively. The MACD is bullish and the momentum is picking up. So Pfizer is recovering a little bit, but overall, I think the market is red today. And any green that you see is an opportunity to capitalize, in my opinion. If I have any shares which are in the green right now, I would take them out, book the profit, and keep the cash handy for buying at much cheaper levels. So that's the story for the day. And if I was to look at the earnings, I'm very keenly looking forward to the earnings that is coming from CRISPR Therapeutics, expected tomorrow. That is the 15th of February. And during this week, we are going to get a whole lot of earnings reports, but I'm focused on Hyatt and Wynn Resorts and also Shopify and a few other hotel properties. The reason I'm looking at them is because they would give a forecast of what it's looking like, and they would also talk about the last quarter earnings, where we would have seen the ending of Delta and the progression of Omicron. And what I want to see is whether corporate travel has started, whether people have started moving around, as we saw in the evidence from Disney, Uber, those kind of companies reporting. They were very optimistic about the next quarter, and they also showed good performance in the previous quarter. So that's what I'm looking for in this hospitality industry earnings, as well as in the earnings of Shopify. I want to see whether Shopify is optimistic about the next quarter. So that's what I'm looking at with those earnings. And with that, I would like to bring this session to a close. Thanks for watching this video. Please don't forget to put a like. It exposes the channel to a lot more viewers. And if you're new here and here for the first time and want to know things about CRISPR, please subscribe. Thanks and have a great day. Bye for now.